Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another Velocity Banking review. And here's what I want you to do. Okay, here's what I want you to do. I want you to take a look at this. Okay, this is a mortgage paid off in 2 years and 9 months. And just imagine that this is you, right? How stress free would your life be if you never had to pay for housing again? Okay. And then 3 months later, you're just like, oh, that's not a big deal, right? Just act casual about it. That's how I am nowadays. What? I paid off my mortgage in 2 years and 9 months, and then just pretend like it's all normal, you know? Like, I don't know if you ever watched The Simpsons. I talked about this before, where Homer goes to space. He tells a coworker he went to space, and then he goes, "You've never been?" Right? We can all dream, right? So, so what we're gonna do? If you're not here yet, I want you to dream that you will be here. It's an easy dream. Just relax, be debt free while everyone else is on the struggle bus. You're in the it's too comfortable bus, right? Remember Goldilocks? She was like, this bed is way too comfortable. Way too comfortable. I can't even take it anymore. That's gonna be like the downside of your life. You're gonna be like Goldilocks in the super comfortable bed. Okay. That's what it's gonna be like to be debt free. And we're gonna be debt free using this thing called velocity banking. So what's velocity banking? All it is a debt payoff strategy where you throw all of your money into something called a line of credit. Or actually, let me say it like this: you pay off all your debt, you throw all of your money to debt with the help of a line of credit. So, what is line of credit? All it is a financial tool where you could borrow money, pay it back, and use it over and over again. So, this is my line of credit. One of my lines of credit, $280,000, right? $280,000. And it is a tool where I could literally look it up on my smartphone, click a button, and then they'll dump up to $280,000 into my checking account at a 7.5% interest rate. Can you believe it? I can't believe it either, right? I cannot believe it. I think in Spanish, it's I cannot believo. Well, actually, that's not it. It's no puedo creerlo. Okay. Okay. All right. So let's go ahead and do something. I don't even know anymore because frankly I've done so many of these because I don't even care. And that's how you know like you become a master because it's like I mean think about how much effort it takes to speak your native language, which for me is English, and how you care that you're good at it. That's like the level of mastery that you need to get it. See, some of you are like I see in your emails like you care so much about learning this, but really like you what you got to do is you get so good at this stuff that you don't care anymore, right? And eventually you being super competent at this will almost lead to an appreciation of this, which kind of happens to me once in a while. But I always kind of have to remind myself, "Oh yeah, you're debt free and you're not like everybody else." Well, I'm technically still have debt, but relatively debt free. We'll say it like that. All right. So, what we're going to do, okay, is we're going to have access to, we'll say, $120,000 line of credit, move some of our debt into a line of credit to maximize this thing called cash flow. And here's the secret sauce, right? We're not going to save any money, right? You see this big fat zero right here of savings? We're not going to save any money and we're going to dump all of it into a line of credit. And you know why most people can't do this strategy? Is because they feel ashamed that they don't have any savings. I mean, let me just type in Google ashamed that I have no savings, right? And I'm pretty sure that there's gonna be some chum who posted this um that they don't have any savings, right? Should I feel ashamed? I'm 41. I have no nest egg, or I think it says savings here. 34, no savings, feeling pretty low about this. What do I do? Who needs savings when you're throwing money into debt with the help of a line of credit? Okay. So, this is what we're gonna do. We're gonna start off with the credit card debts first. The credit cards are the biggest no-brainers of what we move into the line of credit. And I know what some of you are all thinking. Who's gonna give you a line of credit when you only have $149 left over? And my answer to that is that banks don't lend money to people who need it. This is how I have over $575,000 in lines of credit. I think 579, right? So banks don't lend money to people who need it. Remember that. So let me do this 85 grand. So our first step is just moving some of the debt into the line of credit. Usually we start out with the high interest rate credit cards and the buy now, pay later loans. And guess what happens? Because this is $85,000 in credit card debt. And it's like kind of like doing a balance transfer. We move into a line of credit. Well, these turn to zero, 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 right? And we literally went from $149.38 to $2,889.38, right? We literally went from this to this in an instant. And here's the next step, which is your paycheck. You put your entire paycheck into the line of credit, you take your expenses out, and then you rinse and repeat. And so after every single month, the balance of the line of credit should go down $2,800. And I actually screwed this up in the last video because I was like, why is my debt going down in like 5 years? This is the first time I've experienced that. And what happened is that I was adding this debt and I didn't include this payment into our expenses, which is really weird. But then last time I did this, I was paying off the debt in 5 years. Let's see how long it takes us to pay off the credit card debt. So we're going to do this and take the next month's balance, which is based on the previous month's balance, the previous month's interest, minus our cash flow. So what's our cash flow? 2889.38, right? Paycheck in, expenses out, and then we're going to calculate the average daily balance. All right, take the average, multiply it by the interest rate, and then you divide it by 12, okay? And then I'm going to say copy and paste this, and then you see bam, 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 debt getting paid off relatively quickly in 33 months. You see that? You see that? Wablam, wablam, alakazam, right? I need a new catchphrase. I get bored if I use the same catchphrase over and over again. Past videos is like, I'm the GOAT, I'm the GOAT, I'm the greatest of all time. And that is because I am the GOAT. Because I paid off my mortgage in 2 years and 9 months. The GOAT. Okay. All right. So 33 months. We paid off 85K. All right. And then now we're going to do this month 33, month 33, month 33, month 33. And then this is what we're going to do. We're going to take these two, right? We're going to take these two, okay? We're going to copy and paste and then get rid of them and move them to the line of credit. Now, why these two loans? Okay, because they give us the most amount of cash flow for paying them off, right? So there's this thing called the cash flow index, right? Cash flow index. It determines the order of your debts to pay off, or it's one way to determine. And so think of it as a ranking system, and basically the lower the number, that gives you more bang for your buck for paying it off, right? So let's move these two loans, or 20 grand, which is these two auto loans at this current time. And all right, so I'm going to do this and do this, and then let's move this 20 grand into the line of credit. So 0.20076.57, right? And then what is the current balance of that line of credit? Let's just take a look. 00, or not the current balance, the current cash flow. It's over 3,000. Oh my goodness. Over 3,000. All right, let's go ahead and do that. And then now, so this is minus 3672.88. Whoa, take a look at that. Paid off in 39 months, these two cars. I am awesome. Awesome. Why does it give me a black color? All right, so let's go ahead and do that. So 39 months, we paid them off. And then 39 months. And then this is going to be, let's see, 85 plus 20 plus 22, which is 127K, right? We got that. And now we focus on paying off the student loan. How many months is the student loan? So this is 00. This is 39, 39. And let's pay off the student loan. Do we need to move it to the line of credit? And not necessarily. I mean, but the interest rate is very similar, but we don't really get that much cash flow paying off. But it's okay. I'm going to be lazy for now. Let's go ahead and pay off the sucker. So I'm going to move this. This is going to be plus 33207.88, right? And now let's move this into the line of credit. And what's our cash flow now? This is 0. And our cash flow is over 4 grand. So it shouldn't take us that long to pay it off. I'm going to do this, Control V, and then do this. And what's our new cash flow? 412772.47. All right, and I'm gonna copy and paste. Okay, and we'll see how long it takes us to pay it off. 47 months. All right, we got it. We got it. We got them. Okay, 47 months. So 47 months. It's 127 plus 45, which is 172K. 172K. All right. So 47 months. Now this is zero, right? And so now here's something I want to highlight, pun intended, but not really, is that notice that this is a 3% interest rate. Okay. So some people on the internet are like, oh my goodness, you should always move a loan into a line of credit because loan bad, line of credit good, right? When it comes to velocity banking. Now, one of the things I want to mention is maybe a little bit of nuance that this loan at 3%, when you move it into line of credit, provides very little cash flow. I mean, would you pay someone $200,000 just to get $927 back in, a month? Kind of like how an annuity works, right? Probably not. You want a little bit more bang for your buck. So, even though that this doesn't provide a lot of, let's say, cash flow in your life, you still need to pay it off early because if you take it to the full term, even at 3%, 360, right? You pay 50% in interest, 113 grand, right? So we do need to pay it off. And we have two ways that we can pay off. Number one is we throw all of our extra savings into the loan, 4,000, which is completely reasonable, right? You make the mortgage payment and you throw the rest into the loan. Now, why won't most people do that is because most people are conditioned by society that they need to have some savings. And what happens is that when you throw all of your savings into the line of the loan, you don't really get it back. And also it's hard, right? So what we're trying to do is just make it easy for you to pay off this loan. Just dump some of the money or the loan into the line of credit and then rinse and repeat over and over again. That's what we call the chunky method. Now you don't have to use this. I'm just saying it exists. And even if you use an 8% line of credit, not a big deal. Okay. So luckily we have this velocity banking calculator to show us how much the chunking method would cost us, which is 220,000, and then what's the current balance, which is 201,196, 201,196.54, and then 30 years, what's the interest rate 3, and then what's the payment amount 927.53, and then we'll use let's do the income and expenses. What's our income, which is 7,100, 7,100. Our expenses is everything except for the loan we're trying to pay off, which is about 2 grand. And then let's just do an $8,000 chunk. And then we see here 3.5 years it gets paid off. 3.5 years. Ooh, that's pretty sweet, right? So now let's just do this. 47 divided by 12 plus 3.5, which means in 7.4 years, we are debt free. 7.4 years debt free. Now remember, this isn't mortgage free. We paid off the mortgage in about 3.5 years. We are completely debt free in 7.4. Completely, right? So now this is zero. Okay. And now we got what we call rich people promise, which is now we have money in our savings. And then, like month two, it's going to be like 10,200 and so on and so forth, et cetera, et cetera, et cetera. Blah, 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 blah. I don't even know what to say. I'm just filling up time to increase the watch time so you can make me more money on YouTube, right? But we have rich people problems, okay? Now, here's what I want to say to end this video. If you want to know where I learned this from Renatus, right? But Renatus doesn't only teach velocity banking, it teaches a lot of other stuff too. So if you're wanting to learn the other stuff, which is financial literacy, real estate investing, go ahead and click the Google form link below. Full disclosure, I make commissions off of sales of product, right? Commissioner. No, I'm not a commissioner. I'm a what we call an independent contracting marketer. Blah, 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 blah. Go ahead and click the Google form link below if you want to learn in my super secret club, aka the cult. All right, well, that's it for today, folks. This is Korean Atlanta Mentorship. Have a great day, and I'll see you on the next video.